What if you could build a retirement paycheck that doesn't force you to sell your life's work? Imagine getting paid month after month from your investments. For most people, the biggest fear in retirement is watching their nest egg slowly dwindle. It's that knot in your stomach every time the market takes a dive, leaving you wondering, is this going to be enough? But what if there was a way to not only protect your savings, but turn it into an income stream designed to last? My name is Brent, and after years of investing, I've seen critical weakness in the most traditional retirement plans. They're built on the idea of selling your assets 2%, 3%, right? It's piece by piece. This strategy is incredibly fragile, especially when it comes to something called sequence of returned risk, which is just a fancy term for a simple nightmare. A market crash happening right as you start taking money out, it can do permanent damage to your portfolio. In this video, I'm going to show you the 3-step blueprint to retire on dividends forever. The goal to help you worry less about market crashes and start designing a more resilient retirement. We're going to talk about how to turn your nest egg into a paycheck generating machine. Let's be honest, the old model of retirement is broken. It's a model based on depletion. You spend 40 years saving for a pile of money only to spend the next 30 years hoping it doesn't run out before you do. Every withdrawal can feel like a step closer to the edge, especially as inflation quietly eats away at your buying power. The predictable income from your job is gone, replaced by the wild, unpredictable savings of the stock market. That's a recipe for anxiety, not a golden age. Yet there's a better way, a path where you shift your focus from selling your assets to generating income from them. This isn't some wild get-rich scheme, it's a logical system focused on building a portfolio that pays you to own it. So let's go ahead and focus on this blueprint that makes this possible. So section 1, we're going to go ahead and calculate your freedom number. So step 1, calculating your freedom number. The first things first, you can't build a machine if you don't know what it's supposed to do. We need to figure out what your freedom number is. This is the amount of annual income that you can live comfortably without working. This is simpler than it sounds. Start by tracking what you actually spend on a month-to-month basis. Look at your housing, your food, your healthcare, and transportation. Don't forget about the fun stuff like traveling and hobbies. Get a real honest picture of your annual expenses. Let's say for this example, you land on $60,000 a year for your ideal retirement. That's going to be our target. That includes, paying your taxes, having some travel and hobbies in there. Now, here's where the modern income approach flips the script. Instead of calculating the giant lump sum you'll need to slowly sell off, we're going to go ahead and calculate your portfolio size needed to generate that $60,000 for you in income. The formula here is pretty simple. We're going to go ahead and take the annual income that we need divided by the target distribution yield. That's going to be our portfolio goal. The distribution yield is the percentage of income fund that pays out relative to its price. Now, historically, people aim for sustainable 3 to 4% from traditional dividend stocks, but here we are in 2025, a new breed of income ETFs using a strategy called covered calls has become incredibly popular. These funds target a much higher yield, often in the 10 to even 14% range or much higher. To see how this math works, we're going to go use a hypothetical 12% yield. So for 60,000 annual income divided by 0.12, that's going to give us a portfolio goal of $500,000. And you're thinking exactly what I'm thinking. That number is so much more achievable, and it is. But remember two things. First, this is still a long-term goal. Second, this is the key. First, this $500,000 is going to be a capital base to aim to never touch. It's an asset that keeps working for you. You're living off your fruit. You're not cutting down your tree. This gives you a powerful concrete target to work towards. This is going to be your foundation, all made possible by these modern income tools. So step number 2, build your income machine. Once you have your freedom number, it's time to begin building the engine. And this is where the strategy really differs from the old school dividend strategy. Instead of focusing only on companies that grow their dividend, year after year, we're looking at specialized ETFs designed for high monthly income. The main focus here is on covered call ETFs. In simple terms, these funds hold a basket of stocks such as the S&P 500 or the NASDAQ 100 that generate income by selling call options on these stocks. This generates a premium which is paid out to you, the investor, as a hefty monthly distribution. The trade-off is this strategy caps some of the upside potential. If the market has a massive rally, you won't capture all of those gains because you've sold that potential for upfront cash. But for a retiree, focus on income from a month to month and being stabilized. This can be a fantastic trade. So what do you buy? A much simpler approach for many is to use the specialized ETFs. Funds such as the NEO S&P 500 High Income ETF, ticker symbol SPYI, or the NEO's NASDAQ 100 High Income ETF, QQQI, are more popular examples. As of mid-2025, these funds have distribution rates in the 12 to 14% range. They aren't magic, their payouts can fluctuate and aren't guaranteed, but they do a lot of the heavy lifting for you. The key takeaway here is to understand the goal, generating the highest possible current income. This is much different from the old model of waiting for the slow dividend growth. You're building a powerful, consistent paycheck right now. By the way, if you're getting some value out of this blueprint, do me a quick favor and hit that like button below. It really helps the channel reach more people who are trying to build a secure financial future, and you'll definitely want to stick around for the next step, where we talk about building a fortress around your paycheck. Step number 3, fortify and protect your paycheck. All right, you've got the goal and you're building your income engine. The final step is to build a fortress around it. This boils down to understanding the trade-offs and managing the risks. First, diversification is still important, even if you use broad market funds like SPYI, which holds the S&P 500 stocks. You might consider adding exposure to other areas to avoid having all your income tied into one strategy. Next, you have to understand the specific risks with the strategy, which are different from the dividend trap. The main risk isn't that the dividend will be cut to zero, but that monthly income can vary, and the fund share price can decline in a down market. High yield ETFs trade explosive growth for high income. You must be comfortable with this trade-off. A strategy that seems to offer incredibly high yield without any downside is often too good to be true. Finally, a quick word on taxes. The distribution from these covered call ETFs are a bit complex. They can be made up of option premium, capital gains, and something called return of capital. Some funds like SPYI and QQQI use specific types of options called Section 1256 contracts that receive more favorable tax treatment, with gains being split 60% long-term and 40% short-term, no matter how long you've held them. However, a large portion of the distribution may also be classified as a return of capital, which isn't taxed immediately but lowers your cost basis, deferring the tax until you sell. The ultimate way to simplify this is to hold your ETFs in a tax-advantaged account like a Roth IRA, where all your distributions can be withdrawn in retirement completely tax-free, provided you meet the IRS conditions. So there you have it. That is a 3-step blueprint to build a high income stream for retirement using these modern tools. First, you got to calculate your freedom number using a much higher yield, giving you a clear, more attainable goal. Second, you build your income machine, focus on covered call ETFs that generate massive monthly cash flow. And third, you fortify that machine by understanding the growth versus income trade-off and managing the unique risk and tax implications. The real power here is the shift in the mindset. You stop thinking like someone who has to make their savings last by selling out 2 to 3% and start thinking more like a business owner. Your portfolio is your business, and its job is to generate a steady and growing paycheck. And this is how you're going to build a retirement where market volatility becomes background noise. It doesn't mean that risk disappears. Income can fluctuate and give up some of those big gains, but it does mean that your plan is built for maximum cash flow. You know that rain or shine, your income is built on a solid foundation. This isn't a fantasy, it's a process that puts you in a greater control of your financial future. Now, I'd love to hear from you guys. What is your favorite income focused stock or ETF for long-term cash flow? Drop it down in the comment section down below. I read every single one, and I'd love to see how you are all investing. Right now, I'm splitting my portfolio between SPYI and QQQI, generating thousands of dollars per month. And if you want more particular guides on building income for more stress-free retirement, make sure to subscribe and hit that notification bell so you won't miss what's next. Thanks for watching, and here's to building your paycheck. If you guys would like, check out the other videos on the channel. You guys can click here on the left, and have a good one. Bye-bye. By the way, if you're getting some value out of this blueprint, do me a quick favor and hit that like button below. It really helps the channel reach more people who are trying to build a secure financial future, and you'll definitely want to stick around for the next step, where we talk about building a fortress around your paycheck.